We have a very big stretch that now begins over the next couple of weeks because mega cap earnings, as I said, kick off in a couple hours. We can show you the calendar, which really lays it out. Mostly next week, but some important ones are this week, too. What's at stake?
Well, first of all, that stretch begins with you coming back. Great to see you.
Did he behave himself while I was gone, and he being Weiss?
Modestly, but I know now that you will rein him in and keep him under control.
Okay.
I've been unleashed.
I'm well rested.
You are well rested.
He was unleashed when I was gone.
But look, Scott, I mean, while you were away, and even today, it's just a continuation of really, really good news for the market to cheer and applaud. And several weeks ago, I told you I expected that the third quarter, this was the potential quarter, where you get a little sideways to lower action. I still think the leading indicator for that is going to be the semiconductors and going to be the technology names. So here we are. We're stepping into earnings. Alphabet, Tesla, IBM. Next week, obviously, we know the rest of the Mag 7. And they're going to be critically important. They're going to be critically important because what you want to pay attention to is the reaction. What is the reaction? Do we get a continuation of a lot of good news and good price action, or do we finally signal that there's exhaustion in the market, the need to pull back, good performance, you get the good earnings, but you don't get the performance.
There's not a lot of exhaustion, it doesn't look like.
Not anywhere. Not anywhere.
Joe T's at a record high. That gives you an idea of the momentum that remains behind this record-setting rally, Jenny. So you have a lot on the line for a lot of stocks that have done unbelievably well over the last 3 months. From the mega cap space, that is where the epicenter of this whole thing is. NVIDIA's up 65% in 3 months, Meta 36, Microsoft 34, Tesla 33, Amazon 26. Alphabet's up only 22%. Only 22%, and no one owns it today. Why? Why? Did people write this company off and their position within AI too much too soon? What do you think?
I think this is a welcome back to you, which is that I own such a small piece of Google, Alphabet, that I sold 95% of the position, but said, you know what, it's pretty cheap. I do have my concerns. So I am participating, not in any meaningful way. If the stock doubled from here, it really wouldn't matter. I think the issue's still there, and I think why people bought it is that Waymo is number one. And if you take a look at what happened after we had Tesla have their robo-taxi announcement, it started moving up when people focused on that. And I also think that they're looking for companies that are cheaper, that are left behind. So they may have enough Meta, they may have enough Microsoft, they may have enough of the other Mag 7s to say, look, they stand a really good chance of definitely being in the conversation with AI, and right now that's more important to me, as is Waymo, than perhaps losing share in search.
Your pal Farmer Jim made a good call on this name.
Sure did.
Yep. On the day of the Eddie Q sell-off.
Yep.
Right, he's in the courtroom. He's talking about, well, first time ever. We see a drop-off in search. And the stock's like, stock goes down, everybody, including many on this desk.
Josh and I pushed back on him at the time. Sorry, Jenny, step back. We pushed back.
Maybe this is existential now because this is what they are. This is at their core. And the stock's up 25% since that day. 25% since the quote-unquote Eddie Q sell-off.
Yeah, but that's a small time period. So maybe if you're a trader and you nailed it on that.
The stock's up 25% since
25%
since the like a tremor.
Okay, and it's up 1% year to date, and it's up 5% over the last 52 weeks. But I'll tell you why we don't own it. Because this is one that I've been telling you, Amazon and Alphabet have been kind of pecking at the edges of our screen every week for our disciplined growth strategy, where we're looking for a high free cash flow yield. And the free cash flow yield is getting there. But here's why we haven't bought it. And it really boils down to just this. Gartner's forecasting a 25% drop in 2026 in single search engine queries. At the same time, you look at Meta, and they've got 90% margins in their single search engine queries, right? So however you look at it, even if they do great in AI, even if they do great with Gemini, it is not as profitable as the main business, and that keeps us at bay. So you look at it and you're like, okay, 19 times, decent earnings growth ahead, but compared to all the other Mag 7s, I think that their earnings are more at risk. I know me personally. I am borderline not using Google to search anymore. I'm using ChatGPT, I'm using Claude, I'm using Grok, I look at Gemini a lot.
Perplexity,
it's just
and on and on and on and on. But
you can, okay.
But maybe that's why the mobile's had a 40% discount.
Yeah, that's why it's the cheapest Mag 7.
I mean, that's right.
Define discount. Discount to what? Discount
let me tell you
what?
something. It's always been among the cheapest of the Mag 7s.
But because you're buying an ad company, right? I mean, that's basically what it is. That's where they made their money. But this may all turn around. It may be down 15% tomorrow.
You also have the DOJ ruling that is ultimately we're going to learn in August what the resolution of that's going to be. Do they need to be broken up? That's important as well. But this quarter,
but that's 50-50 if the sum of the parts is worth more.
But why has it gone up 10 straight days? It's about this quarter. It's about Google Cloud being really strong. It's about digital ad sales coming back very strong in the quarter. And I think tonight they're going to report a really good quarter.
Yeah, Bryn, we almost buried the lead. It's coming off 10 days in a row up. It's trying for the longest winning streak ever today. And now it gets added to the top picks list at Oppenheimer. What are your expectations for this evening?
Well, I think that with Google, the expectations are for 11 and 16% revenue and earnings growth. But I think as everyone's talking about, whether it's Claude, Gemini, et cetera, all of these LLMs are going to look more and more the same. And so I think where Google long-term has a challenge, if you look at these companies, Google's actually the most vertically integrated to win. And if you think about Gmail, Google Calendar, Google Search, you have YouTube. Google has all of our data. They could easily flip that on and make a really powerful AI assistant, but I think it would freak everybody out because at the end of the day, guess what? They still sell our data. And so I think that where you have, Mark Zuckerberg is just like full force, poaching talent. They can get their AI in Instagram and Facebook and monetize that. I just still feel that with Google, it will remain a cheaper name because I don't think their ability to actually monetize their AI has been clear. And I don't think we'll get any clarity of the ability to monetize, which is the key thing, monetize AI. Whereas with Meta, they're going to monetize it via Instagram and Facebook because we all buy stuff every time we go on there.
That is the key. Can they maximize their monetization model? It's unproven. Mackenzie Sigalos is following that for us from San Francisco today because that's the key question. Mackenzie, isn't it?
It absolutely is, Scott. The biggest question for Alphabet is whether its artificial intelligence push will cannibalize its highly lucrative search business. So investors are really watching to see if this AI pivot can power growth without destabilizing Google's core. The company rolled out AI overviews and a new AI mode tab this quarter, but there's still no clear monetization model. Analysts expect softer click volumes, but better conversion rates. Still some signs of resilience. You've got Raymond James noting that impressions are rising as advertisers boost paid search budgets to offset lost organic traffic. Cloud remains another key focus. Alphabet's spending $75 billion to expand data centers for Gemini and its enterprise tools as it tries to catch up to AWS and Azure. Now, shares are lower today, snapping that 10-day win streak, its longest in nearly 15 years. Alphabet is up just 4% over the past year, trailing the NASDAQ 100 and all Mag 7 names except Apple, Scott.
We'll get more questions. I don't know to what degree we'll get the answers we want fully, at least the skeptics. Mackenzie, thank you for that. Mackenzie Sigalos in San Francisco.